Good evening. Please come to IFRS 3 Business Combination, one of the most important standards in your syllabus. Because on this standard, you can get a very lengthy question, which can be up to 50 marks also, a single problem. Business combination is now a global phenomenon. More and more companies are entering into some kind of arrangements. One company may acquire the other company 100% and make it a 100% subsidiary, or it may just acquire more than 50% share and make it a subsidiary. Okay, some or the other form of having control over other entity, and that kind of structure is covered by this standard called business combination. IFRS 3 takes care of global requirement in case of business combination worldwide. Now this standard is used in IFRS. Even the US GAAP is similar to this standard only. US GAAP. So that means the same standard is followed by US and under IFRS. So if these two gaps follow same type of standard, it means you can say more than 90% of the world is covered. Is it right? Which have following the same standard. What is the scope of IFRS 3? This standard will be applied for all transaction or events which will meet the definition of a business combination. If it is not a business combination, this standard is not applicable to you. The scope of the standard is actually very wide. It covers various types of business combinations which can take place. So we'll see them one by one. This standard is not applicable to the formation of joint ventures, because we have two separate standards for that. Which two standard? 28. IS 28 and IFRS 11. So that also we will take after some time. Then it does not deal with, very important, if you acquire an asset or a group of asset, single asset or group of asset, but it does not form a business. If you go and buy a machinery, then you'll apply IS 16. If you buy 3-4 assets together, but this does not represent a business. Okay. So if you acquire a building and in that building you have furniture also, electrical equipment also, land also, you are acquiring a group of asset, not a business. And therefore this standard is not applicable, although there is some minimum guideline here how to do accounting here if you acquire group of asset, but mostly you will apply IAS 16 when you acquire a group of assets. Now we'll start our topic from here. This standard is applicable only if there is a business acquisition. It's not applicable to asset acquisition. You must acquire a business. The definition of business as per this standard, as per different people it can be different. Somebody say it's an income earning activity, yes or no? But this standard says business means it is an integrated set of activities. It is an integrated set of activities. What is an integrated set of activities? Integrated set of activities means there is an input, there is a process, and there is an output. That is called integrated set of activities. That means there is a synchronization in the activities that you perform. If I just assemble some bench, some AC and a classroom, that does not become a business. But if these are arranged properly, then there is a lecture scheduled, there is an output in the form of delivered lecture, then that activity as per the standard will become a business. So integrated means input, process, giving rise to output. Although remember, output is not a necessary condition. It must be capable of giving the output, even that is enough. Normally output, but output is not a necessary condition sometimes. And then also the standard says it will be a business. And assets that is capable of being conducted and managed for the purpose of providing a return in the form of dividend, lower cost, or other economic benefit directly to investors or other owners, members, or participants. So it is an integrated set of activities, and the objective of this integrated set of activities is to provide return to the owner. Return in which form? Dividend, lower cost, or any other economic benefit like profit, okay, market share, directly to the investor or the owners, members, or participant. Now this standard uses this word participant for some common activities like cooperative societies, but that will not discuss much. Is it right? In case of a cooperative business also, people bring their resources, do the activities together, and then they share the profit. But we will not discuss much about this cooperative societies and things like that. Now, one question that they can ask you is in the form of a case study, and then you just have to answer whether the given set of activity given in the question or given set of assets given in the question, does it constitute a business? Because that can be a part of a case study. Case study is given and it says you have acquired this thing, but first you have to check whether it is a business or whether it is an asset. Accordingly, I will decide which standard I have to apply for that. If it is business, then there must be input, process, output. There must be an integrated set of activities which uses some kind of process, and that results into output which is generating economic benefit to the investor or owners. So first we will see what is an input. Input means any economic resource, okay, maybe physical or human effort also. Any economic resource that creates or has the ability to create output when one or more processes are applied to it. These definitions are very general, okay, and the definition they have revised over a period of time. In US GAAP and in IFRS, the definition of business has also undergone a change. So what is input? Any economic resource which can be converted into output, okay, by applying some process over it. Now this definition is very subjective at a time, whether this activity can be called as, this particular item, can it be called as input? Example, write down in your notes. Just to keep you also engaged, you need to write in between something, okay? Otherwise the student will go in sleep mode. So example of input, write down. Non-current assets like your intangible assets or right to use non-current asset, the intellectual property, the ability to obtain access to necessary material, or rights and employees. The ability to obtain access to necessary material or rights, and even your skilled employees, skilled, unskilled employees are also input. Property, plant, equipment are input. Intangible assets are input. Raw material inventories are input. Intellectual property is input. Technology is input. Input should be such that when you apply some set of process, it should be capable of generating output. And then what do you mean by process? Now again, it will vary from industry to industry, business to business. What is process? In my field, what is the process? Teaching is a process. Okay. Or is it an output? Or is it an input? So process. So process means any system. So we have to prepare notes, convert into books. Is it right? Then prepare the say presentation in case if the lecture is delivered in the form of presentation. Arrange for a batch schedule. That is a process. So any system, standard, protocol, convention or rule that when applied to an input or inputs creates or has the ability to create the output. Now write down some example of process. These definitions are very general. Okay. So you can always debate on some aspect and say whether it is process or not. Strategic management process, right there. Operational processes. So when you visit a factory, you see so many activities are going on. On one end, there is an input they are putting, the starting point, and when you go to the other end of the factory, you'll find one output is emerging. And in between, you have a lot of processes happening. That is operational process. And it may also include resource management process. So suppose you have 10 apartments and you give it on lease, collect rent. Even that is a business because then you are managing your resources. So you have a system of identifying a tenant, entering into a agreement with them, collecting funds, money from them, etc. So that can also be a business. Renting out a premise can also be a business if that follows the definition of business. These processes typically are documented, but an organized workforce having the necessary skill and experience following rules and convention may provide the necessary processes that are capable of being applied to inputs to create the output. Usually in most big organizations, the processes are documented. Okay. And therefore everybody in the organization, they are trained to use that process so that it will generate the desired output. What is not included in the process? These items which are more administrative in nature will not be treated as process. Like for example, you people, accounting, billing, payroll, and other administrative system typically are not processes used to create the output. So if you acquire an accounting department, then probably they will not call it as a business because there is no process or output created here. Some degree of subjectivity will enter in your discussion at some point of time. And what is an output? Output means the result of input and process. Input plus process is output applied to those input that provide or have the ability to provide a return in the form of dividend, lower cost or other economic benefits directly to investor or other owners, members or participant. So output need not always be in the form of goods which are sold. Output can be something which can reduce your cost also, which will reduce your wastage, which will generate any other economic benefit. So it again depends on what is the kind of entity. Accordingly, the output will be discussed. For a car manufacturing company, the output will be car. But for a education related activity, the output would be the books, the lecture, the happy student. Okay? No. The delivery of the lecture becomes the output. Now, to test your understanding, a complicated question will come and you have to answer whether this activity can be a business. So, I will try to explain. IT department means information technology department is a cost center to K&K company, a legal firm. This legal firm K&K has a IT department. IT Outsourced Limited, this is another firm who is specializing in the provision of IT service to legal firms. What this company does? This company provides IT service to legal firm. KK and company has its own IT department. KK company sells its IT department to IT Outsourced Limited, consisting of plant, equipment, working staff, working capital and staff. Is this IT department of K&K company a business? That means whether IT Outsource Limited will apply IFRS 3 or will it apply IAS 16 when it acquires the IT department of K&K company. So IT department as such is not selling anything to outsiders, but it consists of plant and equipment, your computer, software, everything. It has working capital, it has staff, and this staff work on those equipment processes and helps K&K company right now to save the cost, which otherwise they would have paid to IT Outsource Limited. Can this cost center, IT department as a cost center, be treated as a business? Yes. No. Yes. Write down one line answer. So this is a simple example. Then as we'll move ahead, it will get complicated. So assets and staff transferred to IT Outsource Limited. Now see, right now it is not generating any output which you can sell. But because this department is such that its services can be outsourced, which means in future you can sell the revenue, generate the revenue from this department. The assets and staff transferred to IT Outsource Limited is capable of being operated as a business. Is capable of being operated as a business. Then in the exam you can stretch this answer by saying that there is an input, there is a process, and it has generated output which right now can be used for cost reduction, but after acquisition by IT Outsource Limited can be used for generating revenue also. Now the next and the most important definition. What is business combination? When will an acquisition of business called business combination and then IFRS 3 is applicable? Okay. So the answer of that question is a business combination is a transaction in which the acquirer, I am not defining acquirer here. Acquirer means the one who acquires, in which the acquirer obtains control of another business, and we'll call him acquiree. So in this chapter, be very, very careful. These two terms will repeat more than 100 times. Acquirer, acquiree, acquirer, acquiree. So in this previous example, identify who is acquirer. Which IT? IT department or IT Outsource Limited? So IT Outsource Limited is acquirer, and which is acquiree? K&K company. Okay. So K&K company is the acquiree. In whose books we have to do the accounting as per IFRS 3? Is it acquirer or is it acquiree? Acquirer. For acquiree, we are not interested right now. Okay. The two elements that are required in transaction to be called as a business. Now, if you look at this definition, to apply this standard, condition number 1, acquirer should obtain control over the acquiree. Now, what is control? Control is defined in IFRS 10. Control is defined in IFRS 10. So right now we will not go into too much of detail of control. Okay. So control means you have the power to direct the relevant activities. Power to direct the relevant activities. In some other paragraph, I will discuss on this control term. Power to direct the relevant activities. This IFRS does not state something like this, that if you have more than 50% share in voting power, then you have control. No. Of course, this is a very strong indicator of control. But less than 50% also, if you are holding less than 50% share in voting power, but you have the control, that means you have the power to direct the relevant activities. You are exposed to the variable return because of your investment in the other entity. And then this will be called as control. With less than 50% also you can have control. With more than 50% also you may not have the control. Both are possible. So one has to really look at the definition of control, apply in the given situation and see whether control is acquired or not. Control is acquired when you can direct the relevant activities. Now, what do you mean by relevant activities? Is all financial and operational activities which are key for running an organization, like decision relating to buying, selling, manufacturing, distribution, raising of funds, right? These are relevant activities. What is relevant in a business? These are the relevant activities, all key activities. And if you can take decision with respect to that. And second thing, what you are acquiring must be a business, not an asset, group of asset. It must be a business. So two conditions necessary for the application of IFRS 3. There must be a business and the acquirer must acquire control over the acquiree. Okay. Control is defined in 110. Now there are some examples given in the notes that an acquirer may acquire control in varieties of ways over an acquiree. For example, by transferring cash equivalent or other assets, in which net assets, including net asset that constitute a business. Now in this example, what happens? Sometime you acquire a business and you transfer one business to that other entity. So even this will be considered as asset transfer to acquire the other entity, or by incurring liability, by issuing equity share, by providing more than one type of consideration, and sometime without transferring consideration also, including by a contract alone. So this is not very much relevant for you. It only says in rare cases, without transferring consideration, only through contract alone, you are given the power to control the acquiree. Agreement gives power to an entity that you can control this entity. Sometimes one more interesting example without consideration, buyback of share by the acquiree. So you are holding say 50% share in a company, other 50 is held by outsiders, total 100. If the other party buys back 25 share from these outsiders, your share will now become 50 by 75 into 100. So you may acquire control even without transferring any consideration. And sometimes it can be contractual. Now again answer one question below. Question number 2. Company X is a liquor manufacturer and has traded for a number of years. The company produces a wide varieties of liquor and employs a workforce of machine operator, tester. Do you know tester? Tester. They test the wine, okay? And then they will approve and then you process it further. Many companies employ tester. They enjoy wine also, they get salary also. Wow. And other operational, marketing and administrative staff. It owns and operates a factory, warehouse and machinery and holds raw material inventory and finished products. On 1st January, now from this much detail, do you think it is a business? They've given so much of detail that one can easily make out that this is a business. On 1st Jan 2000, X1 company Y pays USD 80 million to acquire 100% of the ordinary voting shares of X. Now, one more hint is that you have acquired 100% share. No other type of share has been issued by company X. Very good. On the same day, the 4 main executive directors of company Y take on the same role in company X. The directors of X becomes directors of Y becomes directors of X also. Are the activities of X Limited qualified to be a business? Is it a business combination? Is IFRS 3 applicable? Yes. So the answer is yes, yes, yes. It is a business. It is a business combination. IFRS 3 is applicable. In this case, it is clear that company X is a business. It operates a trade. It operates a trade with a variety of assets. It operates a trade with a variety of assets that are used by its employees in a number of related activities and then you try to explain with the help of this diagram what is input in this business. Workforce, a factory, a warehouse, machinery. And what is the process? It's a wine manufacturing process. And what is the output? Liquor. These assets and activities are necessarily integrated in order to create and sell the company's products. Company X obtains control on 1st January 20X1 by acquiring 100% of the voting rights. So this is the answer. This can be a part of a 40 mark, 50 mark question also, where this will be given as a part of a question. And now we'll see one more interesting example. I will not discuss while reading the question. Read the question, check yourself. Is it a business? Company D is a development stage entity that has not started revenue generating operations. The workforce consists mainly of research engineers who are developing a new technology that has a pending patent application. Negotiations to license this technology to a number of customers are at an advanced stage. Company D requires additional funding to complete development work and commence planned commercial production. The value of the identifiable net asset is 750 million rupee. Company A pays INR 60 million in exchange for 60% of the equity of Company D, that is a controlling interest. Are the activities of D Limited qualified to be a business? So the standard has clarified. It may not generate output right now. Output is not a necessary condition, but it should be capable of generating output. So therefore, if that is satisfied, you have to check input must be there. So input is there is a workforce, and then they are working on a technology, there is a process. They need only some money so that you can market the product and sell it. Okay. Now, second thing, there is a hint also given in the problem. What is the fair value of the identifiable net asset? 750 million. And how much stake is acquired by company A? 60%. So if I look at the 60% value of this company, it comes to 60% of 750. How much? 450 million. But actual payment is 600 million. Difference is 150. What is the difference? Why you are paying the difference for? Why are you paying 150 million more? Because you know that there is a hidden benefit because of all these assets which are working together. And that benefit is the goodwill benefit. Is it right? So in one more way to identify in your question is, in case if you find that there is a premium being paid, you don't pay premium for the asset, you pay premium for a business, because in business things have already been synchronized. You have to just now run it. It takes months, years, decades to set up an integrated set of activities so that you can start generating revenue. So this entity D has already achieved that level that it can start generating revenue with some little more funding. So the buyer knows that this is now a business I just need to run, manage, and hence it is a business. Although company D is not yet earning revenue, you must learn the drafting skill of your answer also for all subjects. That is where our students lack. He will just write, yes, it is a business. No, it is not a business. It is a business because it is a business. Yes, there are students who write like that also. Although company D is not yet earning revenue, for example, in bracket an example of output, there are a number of indicators that it has a sufficiently integrated set of activities. It has a sufficiently integrated set of activities and assets that are capable of being managed that are capable of being managed to produce a return for the investor. To produce a return for the investor. In particular, company D employs specialist engineers developing the know-how and design specification of the technology. Then write down point number next is pursuing a viable plan to complete the development work and commence production. Third, write down has identified and will be able to access customers willing to buy the outputs. Now write down one more line. In addition, company A has paid a premium for its 60% interest. Company A has paid a premium for its 60% interest. In bracket you can write goodwill. Therefore, in the absence of evidence to the contrary, company D is presumed to be a business. Okay. Now we will take a break.